Today I'm going to share a great dividend stock which is currently on sale. That is the Hershey company, ticker symbol HSY. This is a high quality company with some of the best brands in their respective categories. That includes my personal favorite, Reese's. The stock price is now down 35% from its all-time high back in May 2023. The current dividend yield for Hershey stock is now the highest point in the past decade. And in terms of dividend yield, this is the best buying opportunity since the great financial crisis of 2008. So it may be a great time to add Hershey to your long-term dividend growth stock portfolio. In today's video, I will do a full review on HSY stock. That includes a look at their history, business model, and competitive advantages. I'll summarize their latest quarter and earnings report, which just happened this past week. Then I'll do a stock analysis on the company, showing the trends with all their key financials, including dividends. And if you stick around to the end of the video, I'll provide an intrinsic value estimate and price targets for Hershey using a discounted cash flow model. Let's roll the intro. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoyed the video. Throughout, I'll be using my stock research tool, dividenddata.com. I just launched our new AI-powered investment research analyst. Think of this as ChatGPT, but designed specifically for stock analysis. It has real-time data and financial documents, and embedded discounted cash flow calculators, stock screeners where you can filter by hundreds of possible financial metrics, charts and tables with historical financial data, including daily history of dividend yield, and total returns for a stock. I want as many of you to try this tool as possible, so I'm doing a special sale for new signups. You can get 50% off dividenddata.com for both the monthly and annual plan. You can lock in this discount for life. Use the promo code AI at checkout if you sign up via the web app. Just select your plan and enter the two letters AI in the checkout field where it says add promotion code, or click the link in the description and pin comment to sign up via our newsletter and get the sale instantly. No promo code needed. There's a 30-day money-back guarantee, so no risk in trying it out. The history of Hershey dates all the way back to 1894. Milton Hershey, the founder, incorporated the Lancaster Caramel Company and established Hershey Chocolate Company as a subsidiary. He ultimately sold that company and retained the rights to the Hershey Chocolate Company, and that was the start of their milk chocolate journey. In 1907, they launched the Hershey Kiss, and over the following decades, they would grow in success, and Milton Hershey actually became a pretty good example of one of these people that becomes a titan of industry and then gives back to their community. In 1925, they launched Mr. Goodbar, and in 1927, they became publicly traded on the New York Stock Exchange. In 1939, they launched the Hershey's Miniatures. And during the Great Depression, they created a lot of jobs building iconic landmarks like Hershey Park, Hershey Theater, and the Hershey Hotel. The company continued to grow, and then you see an evolution of their strategy. In 1963, they acquired the H.B. Reese Candy Company, and this would eventually grow to be their #1 product. And then over the following decades, you would see continued acquisitions of popular brands, including York Peppermint Patties, Twizzlers, Jolly Rancher, Whoppers, Milk Duds. You could go on, and now they've started to expand into more categories, including snacks. Personally, I would say Hershey is one of the most iconic American businesses. And if you just take a look at the brands they own, you will know a lot of these. You have things like Almond Joy, Bark Thins, Brookside, Bubble Yum, Cadbury, Dots Homestyle Pretzels, Good and Plenty, the Heath Bar, Hershey's, Hershey's Kisses, Icebreakers, Jolly Rancher, Kit Kat, Milk Duds, Mounds, Mr. Goodbar, Payday, Pirate's Booty, Reese's, Rolo, Skinny Pop, Twizzlers, whatchamacallit, Whoppers, York, and many more. And they now have brands across chocolate, fruity, chewing, and refreshing, and snacks. And it cannot be understated how high quality these brands actually are. And I think it should also be noted that their biggest businesses are their highest quality brands, like Reese's. And it's these brands which help form an economic moat around the company. That is a concept popularized by Warren Buffett. And now I'm going to provide a clip of him explaining this idea. This is good stuff too.
Every time I buy a business, I say to myself, if I had $1 billion and I wanted to go in and compete with these guys, could I knock them off? If you gave me $1 billion and you told me to dislodge Snickers as the #1 candy bar in the country, I don't know how to do it. If you tell me I got $1 billion and I got to make it, or $5 billion, and I got to make it so that Wrigley's, Spearmint, Double Mint, Juicy Fruit, all of those get knocked off the top selling gum list. I can't do it. Now, if you give me $1 billion and tell me to knock off all the ladies' apparel shops in Lincoln, I'll make mincemeat of it very fast. I mean, I have a very good business myself, but I can destroy that. And the real test is, can some idiot with a lot of money destroy the business you've got if he decides to compete with you? And we try to buy businesses where no matter who comes along, they've got this durable competitive advantage. Those are the three words that count. And you can make that. You may be able to make that decision about companies that I can't make that decision about. They have to be pretty simple for me. But we buy things that, we have Fruit of the Loom underwear. Are people going to quit wearing underwear? Well, who knows? But we sell 44% of all the men's and boys' underwear that goes through Walmart and all of the mass merchandising chains. We got the lowest costs around. Fruit of the Loom is a name that's been around since 1850 or 60. If you can buy 3 pairs of shorts from us, or 6 pairs or whatever it is, for $5.50, then nobody's going to sell them cheaper. Why are you going to buy anything else? So we'll own that unless we mess it up some way.
In my analysis, I think Hershey has a durable competitive advantage. And to use Buffett's example, I think it's extremely difficult to imagine someone with $1 billion coming along and stealing away Reese's business, let alone all their different brands as well. And what's interesting is we're actually seeing a live example of this at work right now. You have the largest YouTuber on earth, Mr. Beast, launching a chocolate company. And Feastables is taking direct aim at Hershey's. So this is someone who's potentially going to throw billions of dollars at this over the next few years with the largest marketing source in the world. And listen, I would not bet against Mr. Beast turning this into a very successful company. But I don't think that they can destroy Hershey's business. It is definitely some increased competition for specifically the Hershey brand, but I don't think they'll actually lose that much market share. And that's only one of their brands and product categories. Hershey is now incredibly diversified. And frankly, to destroy Reese's, it may take $20 billion. I think you could spend $20 billion with the marketing reach of Mr. Beast and still not eclipse Reese's for market share in that product category. This is 100 years of brand association, and people genuinely like these products. And what Hershey should be trying to do over the next decade is acquire Mr. Beast's candy company and then add it to their product portfolio. Here's another clip of Warren Buffett discussing the economic moat around these kinds of businesses, and I think there's some important takeaways for our Hershey stock analysis.
What we're trying to do is we're trying to find a business with a wide and long-lasting moat around it, protecting a terrific economic castle with an honest lord in charge of the castle. And in essence, that's what business is all about. I mean, you may want to be the lord of the castle yourself, in which case you don't worry about that last factor. But what we're trying to find is a business that, for one reason or another, it can be because it's the low-cost producer in some area. It can be because it has a natural franchise, because of service capabilities. It could be because of its position in the consumer's mind. It can be because of a technological advantage, for any kind of reason at all, that it has this moat around it. And then what we have to decide is all moats are subject to attack in a capitalistic system. So everybody is going to try. If you've got a big castle in there, people are going to be trying to figure out how to get to it. And what we have to decide, and most moats aren't worth a damn in capitalism. I mean, that's the nature of it, and it's a constructive thing that that's the case. But we are trying to figure out why is that castle still standing, and what's going to keep it standing or cause it not to be standing 5, 10, 20 years from now. What are the key factors, and how permanent are they? How much do they depend on the genius of the lord in the castle? And then if we feel good about the moat, then we try to figure out whether the lord is going to try and take it all for himself, or whether he's likely to do something stupid with the proceeds, etc. But that's the way we look at businesses.
In my opinion, Hershey has a durable competitive advantage, and many of their top brands have a position in the consumer's mind that is unlikely to be disrupted over the coming decades. And this is coming from someone who's incredibly bullish on the power of these new social media influencers. And I do think content-based marketing is definitely the future, but the best companies will survive this onslaught of competition. And I would put Hershey in the best of category. That said, the stock price has declined significantly since its May 2023 high, and they actually have been facing financial decline in that time. So for their Q3 2024 results, revenue came in down 1.4% year over year at $2.98 billion, and that was from a volume decline across their product segments that were offset by their price realization, meaning price increases. Net income was down to $446 million, down 12.7% year over year. Earnings per share came in at $2.34 per share, which is down 10% year over year, and their operating margin for Q3 was 22.03%. And when we look at their business, it's heavily North America focused, with their North American confectionery making up 82.9% of revenue. This would be all their chocolate brands in the United States. And then North America salty snacks making up 9.77% of revenue, and international revenue only being 7.31%. And if we go segment by segment, their North American confectionery saw net sales grow by 0.8% year over year, but the segment's income declined by 14.5% due to higher cost. And I will soon explain what those cost increases are. And to reemphasize, this is their number one business. You can almost exclusively look at that segment when you're analyzing Hershey stock, but we'll still cover the rest of them. North America salty snacks saw sales fall by 15.5% due to volume declines, though the segment's margins expanded. The international segment saw a 3.9% net sales decline year over year and a 55.2% drop in segment income due to reduced sales, higher cost, and an unfavorable mix. The number one challenges facing the business are inflationary pressures, and that comes from higher commodity costs, with that number one cost being cocoa. Cocoa cost is a major problem for the Hershey company right now. And on the earnings call, they said that cocoa costs are expected to be a significant headwind into 2025 with a substantial year-over-year price increase. Other inflationary pressures are anticipated in areas like labor and specialty ingredients. And given that Hershey is a chocolate company, cocoa is one of their big expenses. And they likely get the best pricing in the industry, and a lot of these companies will lock in a certain deal for that year. And as you can see in fiscal 2024, the price of cocoa spiked significantly. So now they likely have to renew their deals at this higher cost. And if you compare it to 2022 or 2023, the price of cocoa was significantly less. So over the short term, this is a big problem for Hershey, especially since at the same time they've been slowing down their price increases with only 2% organic growth in the last quarter. And that's because they're facing some volume problems. In fiscal 2022 and 2023, they grew prices by over 8%. So that did give them a little more margin wiggle room, but these increases in costs certainly do not help. However, all of this may just create a short-term buying opportunity as the stock is down 35%. On the earnings call, they expect top-line revenue growth to align with their long-term algorithm of 2 to 4% next year. And in terms of pricing, they're expecting it to be similar to this year, with high single-digit price increases on half of the North American confection portfolio. And despite new competition entering the market, Hershey is seeing gradual improvement in market share trends. And in terms of future growth, a lot of that depends on cocoa costs normalizing. And if that happens, Hershey believes 2026 could see revenue growth above their algorithm rate of 2 to 4%. And they do have cost-saving programs in the work to continue to offset this cocoa inflation. And as you can see, their Q3 revenue did show a bounce back relative to their extremely weak Q2. So the company may be doing a little better than it seemed last quarter. But that whole earnings analysis is really focused on the short-term problems facing Hershey. But if we take a step back and do a big picture look, you can see there is long-term growth trends happening at the company. So let's do a full stock analysis on Hershey over the long term. So the Hershey company, ticker symbol HSY, is currently trading at $178.40. Over the trailing 12 months, they had GAAP earnings of $8.70, which gave it a 20.5 trailing PE ratio. The current annual dividend is $5.48, which is a 3.07% dividend dividend yield, and this values the company at $36.09 billion. And here you can see earnings per share growing over time with the dip happening in 2024. Revenue per share has grown at a 5.5% 10-year compound annual growth rate, and this accelerated over the past 3 years with a 3-year CAGR of 11.73%. And given the performance so far in Q1, Q2, and Q3, I would expect the full year revenue per share for Hershey stock to be flat to slightly down. So it's not the end of the world given they just had 3 years of accelerated growth. If we look at net income per share, that has seen even higher growth with a 10-year CAGR of 9.5% and 14% over the past 3 years. And the company has a long track record of growing net income per share over the long term. And free cash flow per share, which is the most important metric I look at when analyzing a stock, has seen a 10-year compound annual growth rate of 7.3%. The 3-year CAGR is 7.9%, and they actually declined slightly in fiscal 2023. Over the past 5 years, the company has grown shareholder equity by a sizable amount, now at $4 billion. They currently have $614 million in cash and cash equivalents, and currently sit at $4.6 billion of net debt. Hershey is a company that generates reliable free cash flow, and they use that to reward shareholders with a growing dividend. Currently, the Hershey dividend is $5.48 per share with a 3.08% dividend yield. It's a quarterly payment, and it has grown a lot in recent history. The 10-year CAGR of the dividend is 9.86%, and over the past 3 years, this is 14.99%. And their past 3 dividend increases were at the 15% range, and they actually broke their pattern of annual dividend increases and did 2 in 1 year. 2 15% increases in 1 year. And I think now that they've seen these increased cocoa prices, Hershey's dividend growth is about to slow down over the short term. That said, the dividend payment is still sustainable with a 57% payout ratio based on 2023's free cash flow and a 47% payout ratio based on 2023's net income. And as I mentioned at the beginning of the video, this stock price decline has given Hershey the highest dividend yield in the past decade. So purely from a dividend perspective, if you're an investor who's very focused on dividend income, Hershey is probably one of the most reliable yielding stocks with decently high dividend growth. So right now would probably be a great time to buy from the dividend perspective. But there is more to valuation than just the dividend income, and that's based on the future cash flows the business will produce. Currently, analysts are projecting earnings per share to decline in fiscal 2024 and 2025, but then projecting high single-digit growth from 2026 through 2028. And currently on Wall Street, the consensus price target is $207.58, which would imply the stock is 16.36% undervalued at the current price. However, there is a large range of price targets ranging from $129 to $269, and the consensus rating right now is a hold. And I asked my AI investment analyst to do a discount cash flow for Hershey stock, and this actually intelligently pulled pretty good estimates based on what they've said in their latest earnings calls. For example, they're projecting 0.2% revenue growth in 2024, 2.5% revenue growth in 2025, and so on. And in my opinion, they defaulted to an incredibly conservative estimate, putting the implied share price at $159.91. That would make it 8.9% overvalued at the current price, so still even close to fair value with what I would say is a low estimate. And if we click show more here, you can actually build and edit your own discounted cash flow calculation. And that $159.91 number came from assuming an exit multiple of 20.4. I would like to look at it in perpetuity, and there they're giving a terminal growth rate of 2.5% a year, and that's basically just assuming a growth rate past the forecasted years of 24, 25, 26, 27, and 2028. And based on that, it gives you an intrinsic value per share of $248.23. That is a 41.31% upside from here. So that definitely is a large margin of safety for investing in Hershey stock. So that gives you an intrinsic value estimate and an estimated share price. And by the way, on dividenddata.com, you can do this with any stock you want, and you can dive in and play around and edit the data. In my opinion, right now, I would say that the Hershey company is a high quality business trading at a fair valuation. And because of that, it may be a great time to add the stock to your long-term dividend growth stock portfolio. But be sure to let me know what you think in the comments of the video. Again, if you want to use the stock research tool I showed throughout the video, then sign up at dividenddata.com. And I especially want you to try out our new AI analyst. That's why I'm doing a 50% 50% off sale for new signups. Click the link in the description and pin comment and get 50% off for life. Or create an account, sign up via our web app, click your plan, and enter the promo code AI at checkout. That will give you 50% off. Thank you for watching Dividend Data. Please leave a like and subscribe to the channel, and more videos are coming soon. See you then.